Move the fader to the middle. That's better, yeah. 1, 2, 1, 2, 1, 2, 3, 4, 5. You reduce the level of it. Yeah, keep going down a bit, down a bit, down a bit, down a bit. Yeah, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Sounds about right. Is it hissy still?
In case you got the message, ignore it.
Okay.
It's the latest one. Well, well, we've got.
Buzzer the lights. Okay, yeah.
I said there was some confusion about whether it was in the committee room or not, but pre-meeting.
What's that?
So we were just running down. So the meeting's taking place in here, regardless of what my message says. So just.
Right. Okay. Is this on our talk? Huh?
Yes.
Two.
Certainly not as bad as it was.
Two. Yeah, this one, it might fall out. Two. I'll show you. Somebody's been lazy, but instead of. So when I came to the. Oh, yeah. So it's not détente in or whatever you want to call it. Is there any point pulling the others out, or has it gone? I think it's gone, hasn't it? Do you want to go to the control room, because you can tell better there, yeah? Give us a nod on the camera.
There's a radio down there, use that.
Yeah.
There's a radio in the charger, if you pick that one up. I mean, yeah.
I'm going to fix it later.
Yeah,
I just thought if we leave it there, it won't fall out. Yeah, I've got my thing here. I'm getting a little screwdriver. Of course you have. You have a good day off?
I've had a very good day off.
Good.
Bugger all.
Let me do it.
Listening, Inca. Right, Inca, can you hear? You can hear us on the control room. Just careful. That's it.
Go and wash your hand. Go and we're all right.
Okay, Inca, Hammy's on his way down. How does that sound now? Is it still hissy, or is it okay?
Sounds a lot better, apparently. It sounds great to me.
Good. So, happy bunnies.
Brandon, the other buzz you can hear, isn't it like, that's the emergency line on the right of the step. You can do that. Okay. You might not be able to hear, it's like, it sounds like a electrical sound. I don't know how you can do anything about it. Yeah, we think so, yeah. I'll just check them all now, just hold on. 2, 1, 2, 2, 2, 2, 1, 2. 2, 1, 2.
Yeah, it's a lot better, Inca.
2, 1, 2. 2, 1, 2. 2, 1, 2. Yeah, 2, 1, 2. Inca, what you should have heard before was like a real buzzing, not a buzzing, a hissing, and that should have gone now. 2, 1, 2. 2, 1, 2. I don't know, I'm not convinced. I think there's still something there. 2, 1, 2. 2, 1, 2. 2, 1, 2. 2, 1, 2. Shall we just undo them all and give it a...
Yeah, it sounds a lot better. We'll come back down, Inca.
you're taking all the questions, which you're really not.
Yeah, I know. Why am I the centre of attention?
Go around that way.
Is that Kayley?
Yeah.
Hiya, how you doing?
I'm alright.
Hi there.
Kayley, nice to meet
Hi
you.
Kayley, I'm Andy. Hi.
Great to meet you. How's things?
Yeah, not so bad. New boss.
Huh?
New
Yeah,
boss.
I know. It's ridiculous. But
So one thing I'm very good at is
six-
day one briefing, I'll tell you.
6 in 2.5 years.
I know.
Yeah.
6 ministers in
Six
charge of
secretaries of
university
state.
credit in 2.5 years.
Well,
Message.
Studying British politics between Wednesday and Friday.
Yeah, indeed. Of course.
Seem to be the
Okay. Good morning, everybody.
Yeah,
Can I welcome members, invited guests and the public, both here and watching on the webcast, to today's meeting of the Economy Committee. Today's meeting will focus on self-employed Londoners managing finance under universal credit. We encourage anyone to take part in the discussion on social media using the hashtags #AssemblyEconomy and #ShortChange. We have a few short items of formal business to go through first. Please, everybody, make sure that your electronic devices are switched to silent mode to avoid any unnecessary interruptions this morning. Are there any apologies, Claire?
Thank you, Chairman. We've received apologies from Assembly Member Twycross.
Thank you. Can I ask members to note the list of appointments set out at item 2 and ask if members have any other interest to declare? No, thank you. Can we agree the minutes from our meeting on the 30th of October 2018? Thank you. Can we note the outstanding actions arising from previous meetings? Thank you. This brings us to today's main discussion item on self-employed Londoners managing finances under universal credit. We've got a wonderful set of guests. Thank you all so much for attending. I know Ben's on his way down, so he'll join us shortly. First of all, Neil Couling, CBE Universal Credit Director General, Department for Work and Pensions. Kayley, Hignell, Head of Policy at Citizens Advice. Andy Chamberlain, Deputy Director of Policy, Association of Independent Professionals and the Self-Employed. Faisel, Rahman, OBE, Managing Director of Fair Finance. Zoe Charlesworth, Policy and Product Manager, Policy and Practice. And as I say, Ben will come soon. So if I can start off the questions, if I can start to Neil, please. Can you explain why it was so important for the government to introduce universal credit and some of the problems of the old system?
So, the problems with the old system are many, but essentially it boils down to the fact that work is not incentivised to the extent to which the government would like to see it inside of the old system. And the disincentives to work are many. They can be the fact that it's very difficult to progress once you're in work. There's a very high bar to get over in terms of losing your entitlements when you first go into work. The fact that you have to deal with 3 different agencies when you move between work and unemployment, or the other way around, disincentivises people from taking short-term opportunities. And the rewards from work under the old system, because it was an overlapping, particularly of the tax credits and housing benefit systems, the rates of withdrawal on people's entitlement are very, very high. For lone parents, it can be as high as 95 pence in the pound is taken back in reduced benefits should you earn an extra pound. So universal credit is an attempt to smooth all of those cliff edges, to make the journey into work much less hasslesome for claimants, and to support people in work with higher rates of return from that work, so that they see more of the money that they earn ending up in their pockets and not being withdrawn through the benefit system.
Okay. Does anybody else want to comment on that in particular? No? We'll carry on with the next question. And can you set out how universal credit works for self-employed people and what advantages it would bring them? So if I go back to you, Neil, then I will ask everybody else to comment on it.
Yeah, so for most people in self-employment, universal credit works in exactly the same way as it does for employed people on universal credit. And it's worth bearing in mind that by the time universal credit has finished rolling out, over half the people on universal credit will actually be in employment. So it's worth keeping that in mind when you think about some of the design choices we've made. For self-employed people in particular, we had some worries about the way in which the legacy system was working. for them. In the UK economy, there are currently 800,000 unfilled vacancies for employed work. And when you look at the earnings of people from self-employment at the lower end of the earnings distribution, they're very low for self-employed people, about £10,800 a year, compared to, on average, about £20,000 from employment. So we looked at, within the system, trying to incentivise people for whom self-employment is not providing a level of support to lift them out of poverty, whether they would be incentivised to do more self-employment, to take a second job if that wasn't going to remunerate them to the level that's required, or consider leaving self-employment and going into one of these 800,000 vacancies that we've got in the economy. So, as I say, if you're above a certain level of earnings on self-employment, you're treated exactly the same way as you are for employment. But if you fall below that level, we try and incentivise you into trying to take some steps to raise your level of earnings.
Okay, so much has been said about this. Kayley, if I come to you, if I go, what's your view?
I think one of the challenges for self-employed people on universal credit is actually quite similar to those who have fluctuating earnings or are in some other form of non-traditional employment. So people who don't get paid on a monthly basis, people who don't have a regular wage that's the same, that's paid on the same day every month, face particular challenges because of the way universal credit is calculated. For self-employed people, we know that fluctuations in income are more common, either because of seasonal variation or just actually month to month having differences in income. In some ways, universal credit has an advantage here in that it prevents you from having massive overpayments because it checks your income each month. In other ways, it does create challenges for people to have a steady income across those months. And what we see for self-employed people in particular, on top of that challenge in the design, is the minimum income floor, the threshold that Neil just referenced, that if you're above, then you're treated exactly the same. Once that hits somebody, it means that they can be worse off compared to an employed person. So it's the first time that we see in the benefit system that the way you are earning money counts as much as how much money you earn. Traditionally, we would see the levels of income making the difference. So if you earn less than the minimum income floor, which is roughly set at minimum wage for however many hours you're expected to work, what you'll see is that universal credit won't top up your income to make sure that you've got enough to live on. If you go above it, universal credit will take into account that income, so it will reduce your universal credit payment. And then that's how, when you compare an employed person to a self-employed person, that the self-employed person will be worse off if they don't hit that threshold of the minimum income floor. Now, there is a challenge in terms of businesses making sure that they're viable businesses, making sure that businesses provide people with enough income to live on. But the design of the minimum income floor means that actually this also hits people because of that fluctuation in income, not just because over the year they're not earning enough. So over a year, a self-employed person could earn enough to hit that threshold, but depending on the month you're looking at their income, they could be lower and then penalised by that threshold. So again, it's not just about a penalty for the annual income, it is a problem in terms of the fluctuation of people's income that universal credit brings as an extra challenge.
Okay, before I go on to Andy, did you want to?
I just wanted to ask something specific about the minimum income floor. Because people who are self-employed are dependent on invoicing and people paying them. So late payment, things like that, where is the minimum income floor calculated from? Is it from the moment you invoice, or is it from the moment you actually receive the money?
So universal credit is calculated on a monthly basis. It's not calculated, say, January, February, March. It's based on a month from when your claim goes in. And then the department assesses how much money you get during that time and then comes up with a payment at the end of it, depending on how much you've earned that month. So your schedules of invoices, it just depends where it falls in that month as to which assessment month it will affect. What we find is the date of your income actually makes quite a significant difference. If you get paid just before your assessment period, that month is due to end, then actually universal credit can work in a way that tops up your income. if you get paid just after that assessment period, universal credit can actually exacerbate peaks and troughs in people's income. So the date of your payment and how regularly it comes in and how much it fluctuates make a difference to whether it smooths your income and whether you're better off over the year.
Thank you.
Okay, Sean was a quick one.
Just quick, can you give me some idea of what kind of numbers of people we're talking about in London who are self-employed and also claiming universal credit? What kind of numbers are we talking about here?
So for the general population, we're talking about 15% of the population are in self-employment. I'm not sure of the numbers for London, but I believe it's slightly higher in London for self-employment. I'm not sure if other panel members have that level of
It's
detail.
about 800,000, we think, and that's based on ONS statistics. 800,000 self-employed people in London, which is, you're absolutely right, slightly higher than the UK proportion overall. There's 4.8 million self-employed people in the UK.
But how many of that 800,000 will have any relationship with universal credit, will be using it?
Yeah, I don't think anyone knows that at the moment. I don't think that work has been done. So unfortunately I'm unable to give a figure on that.
Thank you.
Did you want to answer that, Neil, and then we'll come back to Andy and go to the guests.
Roughly there are around, I think, 5 million people self-employed across the country in the workforce, and around about 800 to 900,000 of those are claiming tax credits. So we can expect, as we move universal credit on and start the managed migration process, around about 800,000, 900,000 people will come on to universal credit who will be self-employed, if there's no changes in their behaviour because of the way the minimum income floor works and is designed to work, because there is a real problem of in-work poverty in this country. Two things drive in-work poverty in the main. If you're in full-time employed work, it's very unlikely you'll be in in-work poverty. But if you're in part-time employment, there's a good chance you'll be in in-work poverty. And if you're in self-employment, a quarter of the in-work poverty numbers in this country are derived from being in self-employment. So universal credit tries to incentivise more work when you're in part-time work, because we don't want people to be in work poverty. And similarly, in the income floor, we are trying to incentivise people to a level of earnings from their self-employment that can support them, or, as I said before, into other alternatives which will allow them to increase their incomes.
Thank you. If we can go round now with Andy, what comments do you have?
We would support the government's move to try to ensure that the benefit system isn't propping up unsustainable businesses which have no realistic hope of becoming sustainable. But we feel that it's about finding a sweet spot so that you can, on the one hand, not support businesses that are never going to be sustainable, but also at the same time offer support to businesses that may well become sustainable. And under the current system, we're concerned that we haven't found that balancing point just right at the moment. There is mounting evidence that universal credit is putting some self-employed people under severe financial hardship, and it's encouraging them to close their business, which they don't want to do, and they're hoping that they may be able to turn their business around. There are a range of statistics out there which show that businesses become more profitable in about year 3. So in order to get a level of earnings above the minimum income floor, which is a little over £1,000 a month, typically, you would really want to be seeing businesses entering into their 3rd year. Now, with the way the minimum income floor works, there is a start-up period, that's 12 months, where a new self-employed business is given 12 months where it doesn't have to worry about the MIF because it doesn't come in for further 12 months. But we would like to see that extended to 3 years because there's figures from the RSA which show that in the 2nd year of trading, the average self-employed business is earning £665 a month, well under the minimum income floor. The Moan review established that 29% of businesses, only 29% of businesses were earning over £1,000 per month in their 2nd year. So there's pretty good statistics out there which show that for self-employed businesses in their 2nd year,
they're going to struggle to meet that minimum income floor. And that means that a lot of them are going to find it hard to keep their families going and pay their bills. And this is why we are worried about universal credit. And we think that we should be giving a little bit more leeway to allow people to make their businesses profitable before we decide actually we can't keep this going anymore. And the government doesn't want to keep paying in to keep this business propped up.
Yes, we are going to the next. Sean.
Very short one. So you say you want to see it extended to 3 years. Is there any idea what that would cost?
I don't have that figure, I'm afraid, no.
Because obviously it'd be very important for people to decide to support that or not, would be what that would cost. If the work's being done and your argument's correct or not, that needs to be decided, I'd imagine. You're going to need to tell us what that would cost, because then we could pursue it.
Yeah, I take your point. I mean, at the moment, the way the tax credit system is working is that those businesses are receiving tax credits. So the current benefit system is paying for that now. What we're talking about here is removing some benefits from some, essentially we're removing payments to some businesses. Now there's obviously going to be a saving there for government, but we're just questioning, well, what's the cost of that saving to these self-employed businesses is it's going to force them out of business and either into unemployment or into an employed role, but one that they would rather not take.
I accept it, but it's just a case of if you could give us the cost, because then you would be able to understand what you ask for. And of course, the tension here is it's very hard to predict which business will be profitable and which one we're just propping up for an extra 2 years. So that's the tension. That's why the cost is important. But that's enough from me, Chair.
Okay, thank you. Faisel, your views.
Just to put into context, I run an organisation, a social enterprise in London, that offers access to financial services for people outside the mainstream, which includes individuals as well as small businesses. I suppose the relevant point is one of the key aspects of making a decision about whether you can lend to a small business is assessing if they're generating sufficient income to justify the loan. So I suppose a key aspect of our work is that we look very, very carefully at whether a small business, what it generates, how much it generates, and over what time period. We were launched in 2005 and have worked with individuals and small businesses, and of those small businesses, probably about 20% of them are self-employed. Across the gamut of our clients, we work with around 20,000 people a year, of which 1,000 are entrepreneurs. We make a couple of hundred loans a year to small businesses, and 20% of those are self-employed. In terms of trying to put into context about how we assess that, we won't make a loan to a start-up self-employed business because you have no sense about what its income profile is going to look like. In fact, we won't make a loan to any business that hasn't got at least 2 years of track record, especially for self-employed businesses, because so much of their income is very volatile. And I think you're very right to point out, Andy, the time it takes for many of these businesses to be established, it is only really in the second or third year that you get a true sense of what a true cash flow is going to look like. They're generally losing money or more likely going out of business within the first year. So we wouldn't work with any startups and we wouldn't work with any people in the first 2 years, and we would think it would be almost impossible to say that looking at those first 2 years of cash flow, whether that person could either afford a loan or you could determine what their income is. It's effectively where we stand and look at it. One of the big reasons for that is partly around volatility, and it's been touched on a bit already, but many small businesses, and specifically self-employed businesses, have a lot of business volatility, so invoices paying late, one-off charges that they've got to pay, work that's invested before they get a return, so they're often not seeing much coming back, and large transactional payments that come out at irregular times in the course of the year. Their income comes in at very irregular times as well, so an invoice might be charged today, but paid in 90 days if you're lucky, but maybe 300 days if you're really unlucky. So many of these businesses are dealing with huge amounts of volatility on the business side, and many of these self-employed businesses commingle their finances with their personal finances. So you then have all the volatility of your own personal finances. So rental bills that are every month, utility bills that could be monthly or 6 monthly, other bills or transactions that you've got to pay that are probably not aligned with your income flows. And this makes managing two sets of volatility extremely complicated and difficult for self-employed businesses. And what that means is that if you're going to work with this customer segment or this group of individuals, you need to introduce a much, much more defined level of personalisation to really understand what's going on. Not just a time period to understand what their income flows are, but a personalisation to really figure out, are these volatile income flows positive or negative? Are you looking at a month, 3 months, 6 months? Are you looking at a positive or a negative trend? And you can't do that without sufficient time period. And what we've discovered is that many lenders in this market choose not to even associate with this customer segment because it's too difficult to do so. It's too risky to lend to this group. It's too risky to assess. So I suppose I would turn back the point to you and say if professional underwriters are saying it's too difficult to assess these customers for at least 2 years, it would be very hard to make a judgment about their income within a year. And I think even going forward, addressing and working with that customer segment requires a level of engagement that actually is very difficult and expensive to provide. This means that for this group here, for me specifically, I see a multiple level of exclusions. Exclusion from the kind of personal finance market, exclusion from the business finance market, and potentially exclusion from the public finance market where they're struggling to make ends meet.
Okay, thank you. Sorry, have you got anything to add?
Yeah, I'd just like to add something, add some comments to what's been said already. We've just recently run an analysis on the choices people make when they go, self-employed people make when they go over to universal credit. And although we've got data on 500,000 Londoners from our Trust for London project. So it's quite easy for us to look at this data and see and follow it, track over time and see the choices people make. I know that the DWP is doing a huge bit of work into this to be published next year. But this is, so we were looking at 43,000 self-employed people, but the cohort that we could track is only 800, and that's because it's a particular computer system that those London boroughs use. So, and out of those, we found that when they moved over to universal credit, 74% went to unemployment, 23% went to employment, and 1% remained self-employed. So it might be that once we've got a wider group, so I wouldn't rely too much on the figures, the exact percentages, but there does seem to be certainly an indication that the path we're going to see most commonly is to unemployment rather than employment. And that retention of self-employment is likely to be the least selected path. And as I say, these are initial figures. The DWP is doing an awful lot more work in this, and we could do more work in it when we've got more people moved over to universal credit. At the moment, we're just seeing a few move over. So I'd like to, Kayley's comments about fluctuating income. A lot of our people who use our software, especially housing associations, and local authorities, do a lot of budgeting work with people. And they're finding, we're always hearing that the problem of not knowing, not being able to plan for your outgoings, not being able to plan for your rent, your utility bills is a real problem. And I think that hits the self-employed more than others because of this volatility. And I know that we're hearing that feedback over and over again. One thing I would like to say is to bring in council tax to this, that hasn't been mentioned. Local authorities have the ability to design their own council tax schemes. And Policy and Practice probably does more modelling on these than any other company. So we've probably done 150 models for local authorities in the last year. So, and local authorities are under huge financial pressure. They're looking at ways to protect the most vulnerable and make savings. So the majority of them are incorporating the minimum income floor into their council tax support scheme. So the self-employed aren't just losing benefit through universal credit, they're also losing benefit through council tax support. And to go even further than that, some of the local authorities are introducing the minimum income floor for those on legacy benefits as well. So it won't just be as people move over to universal credit. We might actually see some self-employed people's household income going down even while they remain on current benefits. Especially for next year, we're seeing a lot of these being modelled first coming in April 19 and an awful lot being modelled for April 20. So I think as time goes on, we're going to see council tax support for the self-employed reducing as well. And I think that gets very little publicity, but actually it's when you're on low income, the amount of support you get for council tax does start becoming relevant, even though it's much less than, you know, your overall household income. We're hearing from a lot of housing associations that work very, very closely with their tenants that a lot of self-employment isn't about a business idea and building up a big idea. It's about having barriers to work. And these barriers to work, although the minimum income floor does take into account barriers to work, it's set at the hours of the conditionality, so different people will have different minimum income floors. These barriers to work might be at the low level that actually probably not really that relevant to the DWP. They're not enough to get carers allowance. The caring they're doing is not enough to get carers allowance or to have the hours they're supposed to work reduced because of that. It might be that they're getting children to and from school, their child support, the children are over 13, so they're expected to work full time, but that still might not be possible because of various aspects to do with the family, might be to do with health. And I think we have a real problem here in that the work coach is supposed to be deciding on how many hours the person should be looking for work, working. And of course, that's what the minimum income floor is based on. But work coaches have a really tricky job. They're supposed to be understanding the person's situation and sort of being the coach at the same time as they're the enforcer. So a lot of people are very reluctant to start discussing too much about their lives with their work coaches. You know, they're not really sure of that relationship. And we've been to a lot of job centres. Neil can talk about this way more than I can. And they do an incredible job, the work coaches, but they're in a really, really difficult position. And I think that there are a lot of barriers to work. So we're not talking about lots of entrepreneurs who are necessarily wanting to build up incredible businesses. Obviously, that's a cohort, but we've got a lot of people who this is their only step into employment. That actually other types of employment might start becoming quite tricky for them. And the only other point I'll make is about the 3-year. We've been following our self-employed cohorts through longitudinal data analysis, and we see very, very little rise in income. And that might be because the ones after 3 years are moving out of our cohort. We're not seeing those. The successful businesses we're not seeing, and other businesses are coming in. But we're not seeing the increase. So if we follow people over 2 or 3 years, I think over 18 months we saw an increase of 3% on average, whereas, that's right, yeah, and the employed we saw an increase of about 7% over the same period. So we're seeing very flat earnings amongst self-employed. So yeah, I'm just adding that in.
Okay, I'm just going to bring Jeanette in.
Yes, it's to you, Zoe. Thank you for that. The scale fall from your eyes was, from my eyes whilst listening to you. Do you have what sort of range of jobs you're talking about? I was taken with the point that we often think self-employed as sort of like amazing jobs on the way to making their first million. But I just recently had a conversation with my window cleaner, and he has been self-employed for X number of years, and he's saying he just can't cope now, and he's like given over his ladders to somebody else. What sort of jobs are you seeing?
We're seeing a huge range, but it's mostly our information. It mostly comes from housing associations. We do an awful lot of work with housing associations, an awful lot of feedback from housing associations, and housing associations tend to be a bit more proactive than local authorities because rental income is so important to them. So, and they just do seem to be. So they're actually having one-to-one interviews with most of their self-employed clients just to try and get them out of self-employment as soon as possible, so that debts don't build up. So we do have a lot of feedback. Their pattern seems to be, and this might just represent the households because we do know there are more single parents among housing association clients, but there do seem to be a lot of women who are particularly lone parents who are trying to fit in various caring about not just with their children but other relatives and other responsibilities and health issues. So they might be running a craft business from home, some selling over the internet. They're just trying to top up their income at the moment as best they can. But it will make no sense for them to carry on doing so. And these are a different type of business to a business that could grow and is worth financing and moving forward. These are just sole traders trying to top up their income, really.
So universal credit hasn't incentivised them in most instances, has it?
It might incentivise them to employment, and then we obviously the household will be even better off. So we'll just have to track more over time, and I think the DWP is doing a lot of research into where people are going. So we'll see next year when that's published.
So Neil just wants to come in quickly on that.
I do have some data if the committee would like it on the kind of work that people in self-employment and tax credits are doing.
Would be very helpful.
So first of all, only about 5% employ anybody else. So it's predominantly sole traders. You'd expect at these levels of income. As Zoe said, they tend not to increase their incomes. So at the 3-year point, 66% have not changed their income at all from when they started claiming. And to Mr. Bailey's question, each year on to the minimum income floor, so and another year is roughly around 300 million there. The kind of work that people are doing, 10% are taxi drivers, 7% are in construction, 5% are in cleaning, 5% hair and beauty, other building and plumbing around 10%. So it's very sole trader-like work. The other thing I would say, for the people just doing some small amounts of self-employment, they would probably fail something we call the gainful self-employment test. So it is possible to be self-employed under universal credit and the minimum income floor not apply because you're not deemed to be gainfully self-employed, so that you might be doing a little bit of selling in around the internet or that won't be treated as a business by us. You'll have the same conditionality responsibilities put on. But to the question, why did we set the minimum income floor at 1 year as opposed to 3? It was because of what that data is telling us. Now, we have promised the Select Committee, the Work and Pensions Select Committee, that when we've run this data and this longitudinal study that we are setting up and running right now, as Zoe mentions, we will take a look at it and see what the kind of outcomes are from that. But right now we think a year is the appropriate point to set the minimum income floor at, based on that data.
Okay, thank you. Welcome then. I know you missed most of that. Would you like to miss out on this round of questions, or is there anything specific you want to do?
I just want to apologise for getting the timing wrong, but I think Zoe's probably almost certainly covered everything that I could possibly
okay,
cover
fine.
with that too.
All right then, thank you. I'll go on to the next question. The government has just announced that established self-employed people moving to the benefit will be given a 12-month exemption period from the minimum income floor. Do you think that will make a difference? Neil?
Well, we've just announced it, so
yes.
Yes.
Yes,
but the reason why we've done that is there are actually, and this is probably a bit of Zoe's difficulty in kind of tracking cases, there are very few self-employed people on universal credit right now, probably around 10,000. The last time I had a look inside the system, that's out of 1.3 million people currently on universal credit, so it's very small numbers, which is why we can't do the tracking yet, and we explained this to the committee. But looking ahead, we know through managed migration, a lot of people on tax credits are going to come over. If they would come previously to this policy, and the minimum income floor would hit straight away, and we thought there needs to be a period of adjustment for people to come to terms and to think about the kind of life choices we're asking people after a year, new claims and newly self-employed to make and decide. So that's why we brought that in, and it will support us as we move that probably around 1 million cases over from tax credits into universal credit.
Okay, fine. Do you want to?
Can I go back to your 300 million figure?
Yes.
And probably also a question for Andy. And presumably, that's not a cost, that's a lost saving if it was to be extended for 2 years. Because if those people are already receiving other benefits before they're migrated, that's money that's being paid out now. So it's actually a lost saving rather than an additional cost.
You could describe it both ways round. It has the same net financial effect,
right,
which is we need to spend £300 million more.
Okay. So the next question is, isn't this really a false economy, the 1 year rule? Because if people, as Zoe says, come off self-employment and go on to unemployment, presumably their claim on universal credit is going to be higher than it would have been had they been able to continue their business at whatever level.
So there's currently around £5 billion worth of public money being spent on self-employed people, supporting them in the tax credit system. After these changes, we estimate that figure will be around 4 billion, a little bit around under 4 billion, but just let's call it 4 billion for now, because the economic numbers all moved around in the budget and I haven't crunched all the numbers again in the light of that. But that makes sense from the individual's point of view, because if we can incentivise them into employment, the incomes for those families will go up and they'll be lifted out of in-work poverty. But so there are financial benefits to the taxpayer coming through this policy, but that's not why we're doing it. We're doing it because we think, with the number of vacancies we've got in the economy, that many of the people who are currently sole trading could be employed and could get higher incomes for their families from that. As I said, the average income's around £20,000 from employment and only $10,800 from self-employment.
But that assumes that people are in a position to go into full-time employment or whatever. Just going back to what I was asking you about the numbers, from Zoe's figures she's just given us, albeit from a relatively small sample, only 1% are able to stay in self-employment. And I forget what the figure was that went into unemployment.
It was 23% into employment and 75, it was about 75, yeah.
Effectively three quarters
and a quarter.
3/4 of them end up on unemployment benefits in whatever form it happens to be. I can understand the theory behind what you're trying to do, but the question I put to Andy is like this. The sort of people who go into this sole trade of self-employment are people who need flexibility in their work pattern. And that flexibility isn't normally available unless you're in a gig economy, which again creates problems, some same problems in variable earnings and so forth. So it's not a real question for Andy. Is it a realistic prospect for people whose self-employment at whatever level fails to go into employment? And from Zoe's figures, apparently not.
Well, this is our concern, yeah. So that's what we're concerned about. And so if you look at some of the groups where there are disproportionately high numbers of self-employed people, there's a disproportionately high number of self-employed disabled people, for example. And there are around 750,000 disabled self-employed, and their earnings are 23% lower on average than the average overall self-employed earnings.
If they're in a no conditionality group, the minimum income floor won't apply to them.
Fair point. Okay, sure. So not all of those people will be affected. Zoe mentioned working mothers, and a lot of so 51%. Sorry, I'm keeping using percentages. I hope I'm not overdoing it, but it's helpful for me to try to explain sort of the picture. Self-employed women, 51% of self-employed women earn less than £1,000 per month. So they would be affected by the minimum income floor because they would be expected to be earning over that. So these are the groups, and we can see that it's quite easy to imagine how it would not be straightforward necessarily for some of these groups to go into an employment where they would have to meet certain criteria imposed by the employer, which they would feel unable or unwilling, or it would make life very difficult for them to do given their other responsibilities. And this is one of the concerns that we have with the imposition of the minimum income floor. And Susan, just to go back to your point about the extension of the 12-month start-up period to existing businesses, we do actually think that that is a helpful financial cushion for businesses which are transitioning into the new UC system.
But if the system didn't change, you wouldn't have to have that in the first place.
No, that's true. But it doesn't address the sort of the underlying problems of the minimum income floor, which is around the expectation of earnings, and as others have mentioned, the volatility of earnings is a big problem. If you have one big expense in a month, then you're really hit by that. And there is also just one other point on the volatility. There's a concern over the admin burden, because you basically have to do sort of accounting for on a monthly period. You have to work out what's coming in and what's going out, whereas you would normally do that over a longer period. And that's going to just means more time staring at the books rather than going out and trying to make money for the business.
Yeah, and just a question from Kayley, actually. She mentioned earlier on, straightforward question, the straightforward answer this will be, is it worked on invoices delivered or bills actually paid?
In terms of outgoings.
In terms of the income for the DWP purposes, do you actually look at real income, as in pounds coming into the bank account, or when the invoice is delivered, does it count?
So,
I'll let Neil answer it.
Okay. It's the actual money you receive.
Yeah, okay.
And to Andy's point, 97% of people are reporting their self-employed earnings to us monthly online now.
Mm-hmm.
Now, you know, it's only 10,000 people, as I said before,
yeah.
but 97% are managing to do that, and the rest phone in.
Yeah, I mean, going back to my original question that set all this off, we've got details here of the sectors that low-paid self-employed people work in London. 41% are in construction, electrical, plumbing, decorating and so on. 22% are in administrative and support services such as cleaning. 17% are drivers. 27% are in what's described as professional, scientific and technical, which is design, photography, translation. And 10% in wholesale and retail, which are all very flexible sort of jobs for self-employed people.
Yeah,
the problem really is, isn't it pie in the sky to think that those people are going to be able to hold down a full-time or even part-time regular job, bearing in mind the sort of conditions they can set for themselves.
So, Mr. Disball, the figures you've got there are obviously for the whole of the self-employed population in London, not the self-employed population on tax credits, which were the figures. No, these are the figures. These are the figures for low-paid self-employment. In the UK, the figures are slightly different, but 73% of London's low-paid self-employment are in those categories. All right, I thought that
it's not across the board. That's the low pay. It may be there's a similar number in better pay, but that's the low paid figure.
Okay. So I mean, you know, in terms of when you ask self-employed people, they definitely want to be self-employed compared to employed. So only about a third of self-employed people on tax credits want to be employed. So they're making a life choice to work in that way. And you're quite right, for some people that will suit their lifestyle, and the other, maybe their caring responsibilities. As Andy was saying in his answer to a question, lone parents will only be required to work at minimum income floor congruent with their conditionality requirements on them. So not all lone parents have to be seeking full-time work, for example. Minimum income floor will be set at that level. So we try in the system to respond to some of that, but I will keep bringing the committee back to the hard fact here that a quarter of people in work poverty are self-employed, and we are trying to do something about that in an economy where there are really good opportunities for employed earnings, which will lift you out of that in-work poverty. And that is something the system doesn't do now.
But that assumes that the people we're talking about are in a position to take and hold down those jobs.
So to Zoe's data, I'd be very interested to see Zoe's data and understand what the destinations ultimately were. Because we know that the Job Centre Plus system is very effective at getting people jobs. I mean, the OECD consider it to be one of the most effective, if not the most effective, public employment service system anywhere in the world. So it may be that the person's transition is from self-employment into unemployment. You've then got to ask, how quickly do we get them into employment? And then what are the levels of earnings there compared to what they were earning in self-employment?
I accept all that, and I know the Job Centre Plus does a good job. I know when I was on the Work and Pensions Committee myself many years ago, that's one of the things we looked very closely at, and compared to the old employment exchanges, it's a complete transformation. There's no argument about that, but you still come back to the subjectivity of the individuals we're concerned about. And my argument, or I put to you, is, in effect, isn't this cutting off at 1 year effectively a false economy? Because if those people, the 3/4 who go into unemployment, end up claiming effectively more because of the floor, effectively you're not going to save anything. That's basically the premise. I mean, you were saying, okay, they can get a job. My argument, and I think Andy was backing me up, is that, well, not say all, but a significant proportion of these people are not really in a position to take employed work, because it doesn't have the flexibility that they need to run their lives and generate as much money as they possibly can.
Should people formerly in self-employment go into unemployment, it will cost more money. But we know the system that we are running is very effective at getting people into work. And in fact, universal credit is even better than that old JSA system at getting people into work. So our expectation is that the burden on taxpayers will fall because of this policy. It will not rise. We will not know until we've done some of the evaluation and tracking there. And clearly, if we find something hasn't happened, then we'll look at making some changes, which we've done regularly on universal credit in the light of evidence that's been presented to us. But right now, the evidence is very strongly that a year from MIF is the right thing to do, and that's what we said back to the Select Committee. Let's do the tracking, let's do the research, let's see what happens.
But the people here are all saying a year's too short. Like Kayley said it, Andy said it, Faisel said it. Zoe didn't say it, but I didn't because she wasn't asked, but I don't know if she'd agree with that. You've got all this range of experts who are saying it's not going to work. And the problem is, I mean, at the moment you've only got a very small sample, so how long is it going to take before the number of people who are going to the food banks again, the increasing number of the food banks, force you to rethink?
So we went and looked at the data, and the data shows that after a year and after 3 years, there is very little difference in terms of the likelihood of that sole trading, that business, having an increased income. So there is no difference between 1 year and 3 year. So we're forcing people, in one sense, to confront that at a 1 year point and a 3 year point. My colleagues are arguing for a 3 year point there, and I've given you the cost within the system of what each year's extension would generate for taxpayers.
But have you factored into that assessment the number of people who will, as a result, be claiming higher rates of benefit, whichever it happens to be, because they haven't got a job?
Well, only if
you've got two sides of the balance sheet, haven't you?
Yeah,
on the one hand, you've got how much it's going to cost you stroke loss savings in having the 2 year, 1 year instead of 3 years. On the other hand, you've got to factor into that how much extra you're going to be paying out in unemployment benefits.
So we're at record low levels of unemployment, and there are 800,000 unfilled vacancies in the economy. My contention is that as the labour market clears here and these individuals clear through the labour market, they'll make it into employment. We will know when we've run the analysis on this. The government does not think it's the right time. Just because people say 3 years is the right time, we say, let's have a look at the evidence. We based our decision originally on a year on evidence. If we'll know how universal credit is a new system, we'll see how it's performing, and if it shows that what we think is not true, then of course we'd look at making some adjustments.
I mean, so at the moment, it's lick your finger and stick it in the air and see what happens.
It's look at the data. The data shows that after 1 year and after 3 years, businesses have no difference if they haven't increase their income after 1 year. It's very likely they won't after 3. And that's the basis, the factual basis on which we made this decision.
Right. Okay. Sean, if you want to come in there.
Hi, thank you. Sorry, I just want to focus on your figures, because I think your figures could be meaningful, but we have to put them in context. And I wonder if you could look at that for me, because, of course, because you deal with housing associations, you tend to be dealing with a very particular vulnerable end of the employment market. And I wonder if that has that.
No, the figures that, if you're talking about the figures that I gave you about the 3 quarters and a quarter, those come from low-income Londoners. So that's from the housing benefit data from all London boroughs. So that's all the people in London who are on benefits. Okay. So, but we could only track. So we can look at the household income of all those Londoners. We know which of them are self-employed. But the reason that's reduced to 769 for that analysis was because as they move over to universal credit, the local authorities don't have access to so much data. So there is only one computer system at the moment that certain local authorities use for council tax support that provides the level of data we need to be able to do that longitudinal tracking. We're trying to work out a way of doing it with the others. But at the moment, that's all we've got. So that's why I'm saying don't focus too much on the figures. It's more the pattern at this stage. This is all news. This is something we're creating at the moment. It's all very new. I would be absolutely certain that those patterns are right, that the majority are going into unemployment, small percentage going into employment, but very, very few going self-employed. But this is only tracked over a short period of time at the moment. And I'll go back to what Neil said, that what might be happening is that they might be going from
and therefore not claiming a full amount of unemployed, or is it better not to? And you know, I've got figures here. Just because you're in work doesn't mean you say you're not in poverty either. 2.8 million people living in poverty in families where all the adults work full time. Families with 2 parents working full time at the national minimum wage are still 11% short of the income they need to raise a child. So the sort of people who are in this sort of business earning not a lot, if they do manage to get work, are probably going to be in the in-work poverty box instead of the self-employed in poverty box. So I don't think it really takes us a great deal further one way or the other. But I mean, can I come back to Andy and back to our sort of schedule of things we want to ask about? I mean, is the effect of all this to discourage entrepreneurship?
I believe that it is, yes. You do have to be, you know, a bit careful about what really is entrepreneurship. You know, is it we're as Zoe said, we're probably not talking about the majority of these people are going to go off and be the next Richard Branson or whatever.
So if we take the window cleaner, would
yeah.
you call a window cleaner an entrepreneur or somebody who's trying to make it?
Sometimes we say that they often will say about themselves that they are not an entrepreneur, but they have to act entrepreneurially, or they have to display certain entrepreneurial characteristics. I mean, no one's looking after them, they're looking after themselves, they're keeping their business going on their own. I believe that that is entrepreneurship, but they're not growing the next big empire. That's for sure. I mean, the FSB have said that this does discourage entrepreneurship. I think IPSE believes that we should be looking at policies which encourage people to strike out on their own, albeit with that caveat that we don't want to encourage them into sustained periods of poverty, which is what Neil is saying that this policy is trying to address. And we completely recognise that as well. As I say, it's a balancing act. And at the moment, we're worried that the balance isn't quite right.
Could I chip in here, please? So just 2 things that strike me from this conversation. The first is that we need an actual proper test. So I agree, we need to see this data in terms of what level, how long do people need. But in its current form as a policy, it's not a proper test, because we don't know what happens at 2 or 3 years in universal credit. There are fundamental differences between tax credits and universal credit beyond the minimum income floor. There is much more regular contact with the individual. There's work coach support, and there's much more regular reporting of income and much more tracking of that income that you can see. The problem with the current actual policy of minimum income floor is it's not a test that's being evaluated, it is the policy that is in place that will affect all claimants. Until we get that data, we don't know whether it's the right policy or not. And it's continuing to be rolled out and will continue to affect people who move from tax credits onto universal credit. If we actually wanted to test the effectiveness of the policy, you'd have a control group that weren't affected by minimum income floor. You'd look at what the interaction with the job centre leads to in of itself without the threat necessarily of the minimum income floor. So all for testing and data and evidence, but it has to be in a proper evaluated way rather than it is an assumed policy at the moment that is affecting people, and then we're going to check at a certain point whether it's working. The other thing is we're having a discussion here about viable businesses, whereas actually people who have viable businesses by all accounts will over the year hit the minimum income floor. During the year are affected by this policy and will receive less financial support because of the way their income comes in. Now, from our point of view at Citizens Advice, that balance is not right. To try and tackle businesses so that people aren't left in a situation where they've got low incomes, at the same time as negatively affecting businesses who, as I say, have a sufficient level of income, but just get it coming in through the year in different ways. It doesn't seem right to us that the policy has that trade-off on the other side of it.
Yeah, I want to come on to this point about the monthly assessment and its impact, but I forgot the question I was going to put to you. So I'll have to try and remember what it was in a minute. So if we look at the monthly assessment, again, this is for Kayley and Andy, I think. How can small businesses address the ebbs and flows? Does it just push them into debt, or and therefore to winding up and going unemployed?
Yeah, I mean, it's not like your energy bills, you can just say, right, I'm going to pay, 20% less this month, or your rent, you're going to pay less this month. But in the actual calculation of income for minimum income floor, if you have a bad couple of months, you will receive less benefit support. And over the year, you will receive less benefit support compared to an employed counterpart. Our calculations are that somebody who has a fluctuation of, say, £160 per month, a single parent, earning just short of 10k per year, we'll see fluctuations of around, they'll be worse off with about £500 over the year. Again, it's not like their bills stop during that time, or that their finances, they can say, right, I'll just pay less towards this. If they were employed, they definitely wouldn't see that drop.
So I think what you're saying at the moment is, going back to my finger and licking your finger, is that this decision policy is not evidence-based.
Yeah, I mean, there is obviously, we're referring to data sets, and Neil has referred to data sets that are relating to tax credits. The problem is UC is different to tax credits. So we need to see what happens in the UC world, and evaluating it both in terms of the success of supporting low-income self-employed people, whether they've got fluctuations in earnings or not, and then the success of progressing people's earnings and increasing their earnings. Those two things have to be done at the same time for it to be successful.
So, I think the problem with universal credit is this, that a lot of people suffer from their incomes going down, ending up going food banks, all the rest of it. And then the government catches up and tweaks the system to try and deal with it. But there's a lot of hardship in between to produce the evidence that that particular aspect of universal credit isn't working. And the risk here is, when this comes in fully rolled out, is that we end up with a lot of people who are presently self-employed going bust or claim unemployment benefit or ending up in the food banks until the government catches up, and then Neil decides, we've got to tweak it a bit.
Andrew, can I just come in there? Sorry, Kelly, it's just your point about hardship, going back to Susan's previous question about this 12 months being extended to everybody. Is it going to make a difference? I think it's going to make a difference mostly because of the support that can be given during that time. Not reactive support, not people going to local authorities, going to JCP, going to CAB, but the proactive support that some local authorities, some housing associations are doing now. That year gives them a chance to contact those people, show them how much they'll get now, what's going to happen when the 12 months runs out. It can model for them what happens if they move into employment. It can sit down with them in their homes, discuss different options they have. So instead of having hardship, I think those figures I gave you earlier are people who perhaps didn't have this option. Change of circumstances, they went over to universal credit, immediately they were hit by the minimum income floor. What that year does is it gives time for support organisations to contact those people, work with those people. If people decide to stay in self-employment, they've got a feasible business, it gives them time to plan for having less income. I don't know if you can plan for having that much less income, but some sort of planning. But it does allow people a chance to contact people and set out options with them. I think that's why it's important.
I think that's a very positive way of approaching it. And it's probably the most positive thing we've heard this morning. You've got this 12-month sort of Damocles hanging over your head about what happens at the end of 12 months. The point I was really making, and I don't know if Neil wants to comment, is this, that a lot of your rollout so far has not been without problems. I think that's universally accepted. And the difficulty is the rollout so far has meant a lot of people have undergone a lot of hardship before the system's tweaked or more money is put in. We saw a chance to put more money in or about to put more money in the budget to correct things that have gone wrong. And my concern is that we're going to have a lot of people, albeit, with all the encouragement you've given, facing the 12-month cut-off and undergoing lots of hardship, which could be avoided if we thought it through or piloted it, I think Kayley was suggesting, to see how it works for self-employed. Because as you say, your sample is still pretty small. I think Neil said there's only 12,000 people nationally on it. So at the moment, we're working with very, very small samples. Yeah. And really, it's not been properly piloted, I think the points we're making.
Yeah.
Do you mind if I follow up on something that Zoe said? So I think this point about proactivity is critical in this, because I'm hearing a lot of ifs in this. If people have barriers to work, if they are disabled but slightly below the criteria for getting PIP or other forms of support or to receive conditionality, we don't from everything we've heard here, know concretely very much about the specific barriers that are affecting this quite large percentage of self-employed people who aren't increasing their earnings or who are decreasing their earnings. This is something we can deal with proactively, because we can identify these self-employed households, we can identify households who aren't improving their income under legacy benefits. And if we follow up with those households and take a more kind of focused data collection initiative, then we can start to tease apart, okay, is it that these are people on sort of intersectional barriers? Is it purely that they have childcare responsibilities that they can't overcome? And then this year of support that's going to come in universal credit can be more effectively targeted if it turns out that the problem is, you know, the criteria for disability or illness are too high. Then you can look at ways to support that specifically. But we need more information about who these people are, because I don't think there's been a lot of hypothesizing about why they're not improving, and that's what we need to know.
I think it's fair that it's a lot of assumptions going on, and you know, I mean, I don't think there's anything new about this. You know, when I was on Working Pension Select Committee for 8 years, and under the previous government, there was a lot of policies put forward without properly piloting, and I think we've seen the same continue. Sorry to go the DWP ever since.
Days.
Ever since. And the real issue is, you know, I just don't think this has been properly piloted sufficiently to get the data, evidence-based decision making rather than political choice decision making.
So the only thing I would say back to you, Mr. Dismore, is, I think I said it 3 times now, we use the evidence from the tax credit data to inform the decision about how long should the grace period, this 12 months, be. And because there is no appreciable difference in the tax credit data between the 12-month position and the 3-year position, for the government it was, you know, exactly as Mr. Bailey suggested, let's intervene early here. Let's intervene at 12 months. Now, some of my colleagues think that period should be longer. We have said to the Working Pension Select Committee, we'll produce longitudinal data that will look at this, and if the evidence suggests something should change, then we will look at making changes. But, you know, right now, it is wrong to assume that this is just a finger in the air, as you suggested. If anything, I put it back gently to my colleagues here, whether it's their fingers in the air rather than mine on this one, because we have actually used the tax credit data. Now, Kayley is absolutely right. Tax credits are a different system, okay? But to suggest this is not evidence-based would be wrong.
Well, it's evidence-based on it's apples and pears, isn't it? I mean, Zoe's given a very positive way forward in terms of looking at the difference between tax credits and universal credits. So it hasn't really been tested on the universal credit basis, except, you know, you're making a decision based on historic evidence from tax credits. That's fair enough, but this is not the whole thing about universal credit. Is on the basis that tax credits doesn't work, therefore we're changing it to universal credit. And my I don't think it's an answerable question really. My argument is it hasn't been piloted as a universal credit change from before because the numbers are too small.
Yeah. Right. I'll just make one quick comment, then we must move on. I've run a small business myself for 40 years, so I mean one of the reasons that we do our own businesses for various different reasons, but we understand that it's the flexibility that, you know, is beneficial, and the ability to work lots of extra hours and earn extra money. And one of the things that we have to understand when we start earning money is that it will fluctuate. So I would have thought that a year you should know then that you've got fluctuations and that you've got to put other measures in place in order to build up a business, and that's when Faisel will start lending money, etc., etc. And it's only if you can increase that.
That's my last question to Faisel, really.
Right, good.
Yeah, so
can you carry on with the questions?
Yeah. Well, question for Faisel, because you've been sitting there very, very quietly, listening to our backwards and forwards. I mean, presumably you have seen cases where the self-employed have got into debt because of income volatility. What can you do to explain how fair finance's business models can support people in those circumstances? You said you already won't lend to less than 2 years. And why do you choose 2 years rather than 1 year or 3 years, I suppose, is the sub-question.
I think Fair Finance was launched in 2005. We spent a lot of time working with small businesses And we initially launched the organisation working with startup businesses as well as individuals for personal finance use. What we found within the first couple of years of doing that was that the default rate and failure rate for small businesses at startups was extremely high. It's close to 60 or 70%, and I think that's borne out by lots of policy papers that have come out over time. So I think what we wanted to do was to not be in a position of over-indebting individuals who are really just starting an idea or a business, because the most successful way to grow a business is with equity rather than debt. What you really want to use debt for is when you've got some stability of cash flows and you have some ability to see invoices or financing coming in, and you want to manage the cash flow. And our decision was effectively based on that. It was to say, at what point would it be responsible for us to lend, and at what point will you have enough data to know what to ask for? Because up until that point, all you're really doing is you're working it through. And if most of them fell within the first year, it felt sensible to wait until that business is stabilised before the second year. So that's why 2 years was the focus. I think also the government has a programme called the Startup Loan Fund, which works with businesses that have less than 2 years of track record, and that is it's a very soft loan. It's very advantageous. It's almost like equity for many businesses, and in a way, that's a much better product than taking a loan from us or from anyone else. So we wanted to take ourselves out that space. In terms of businesses that have how we help businesses manage their finances, we have three arms in the organisation: a kind of a personal finance arm, a business lending arm, and a money advisory service. And I've been talking to a number of the team around what exactly happens around default and failure. And really, mostly, as anyone who's worked in the business knows, it's generally about cash flow rather than the business itself. That's the reason why you fall into financial distress. And it's often about big cash flow items that are often the most financially distressful. And interestingly for us, the two biggest ones that have come up are HMRC payments, which are often very large and annual, and then often down payments either on your rent or in arrears on your rent. Those are the kind of the two biggest areas. And interestingly, if you were to search online as to accessing finance at short term, you'll find that there will be a plethora of payday lending firms that will lend to you just before HMRC deadline dates. So you can see that the private sector has adjusted to reflecting that. What we try to do with many of those customers is try and work with them around, firstly looking through the company and seeing, would they have been able to pay this if they had managed their finances effectively? Therefore, are we financing a business that just can't finance itself, or are we financing a business that could work? We normally work around trying to help them build their financial management skills, give them some coaching or support, generally very light touch, because it is very expensive and time-consuming to do that kind of work. There doesn't exist very much specifically designed for self-employed businesses at the moment. But what I will come back to is the point that I said earlier, is that these businesses are complex, not because necessarily understanding the business is complex, but because the financial management that these people are managing are very complex, personal and commercial. And so until we can get deep into understanding what's going on, we're not able to design a solution. So our response is look very carefully at how the business works, offer a degree of personalisation that currently doesn't exist in that market, and try and look through whether we can build up a way of managing your finances so that you don't get into the same problem again when we deliver our finances to them.
Okay, lovely, thank you. Sean, you've got some questions now.
I'm direct my comments most in the initial comments to Zoe and Ben. What work has policy and practice been doing to help individuals transition to universal credit?
We don't work directly with individuals. We work with local authorities and housing associations, but mostly with local authorities. So we use their housing benefit data and their council tax support data and their rent arrears data and council tax arrears data. So we try and gather as much data from a local authority. Once we've got that data, there's a couple of ways that local authorities can use it. So one of the big ones, and 8 London authorities have gone down this path, is that can all go into a dashboard, and it means that they can then identify patterns around low income, they can identify need and low income and where to target, and then they can track interventions. So, for example, they could use that tool to find all the self-employed people in their borough, and then they could put them in order of how they're going to be hit by the minimum income floor, and they could arrange visiting officers to go and see them all. They could then support all of those using another tool they use from us, which is a calculator. But the calculator isn't just a calculator. What it does is, once they go and see that self-employed person, they can say, this is what you're getting now, this is what you'll get under universal credit. But it allows modelling. So it says, but if you took a job, if you gave up work, you didn't work at all. So it allows them to see different scenarios. And there's 8 local authorities who are using that. But they're not very... Housing associations use the same. They obviously can't use a dashboard because they haven't got the rights to that data. But they use the calculator. And a lot of housing associations, as a reaction to universal credit, are trying to get a financial overview of all their tenants. So every single tenant they sign up, they're now trying to capture household financial data, just so that they can immediately intervene as a person moves over to universal credit. And the most proactive work I would have to say we are seeing is from housing associations who try to intervene immediately they know someone goes on universal credit. Immediately they get the UC notice, they try and do a visit to see what the problems are going to be, to see what the budgeting problems are going to be, to see if there's things like self-employment. They just try and give that support right at the very beginning, because obviously for them, that otherwise rent's not coming in, the whole housing association business is at risk. So yes, they do extreme amounts of proactive work, and I know they've done a lot around self-employed, which is why I was saying about that year being really good, because they've now got the time to do it, because if you've got 5 weeks, you've already started getting into a nasty cycle of debt. If they have a year to contact those people and actually work with them, you'll end up with much more positive outcomes. For local authorities, they're a bit stuck because they haven't got any money. So they're doing a lot of reactive work, an awful lot of reactive work. So they're using our tools for when people come to see them, and they're using them proactively to inform policy, so around discretionary spend, like with DHP's welfare assistance. So they're using it to define who they want to help and things like that. But the most proactive work we're seeing is around prevention of homelessness. I think that's just a bit, to them it's the most urgent. So these tools are being used, and they could be used to be targeting, supporting, tracking interventions for every self-employed household. They're there, they just need to press a button. They could be doing that. They don't really have if they have resource to do proactive work, it tends to be focused on using these same tools towards prevention of homelessness. Because I think that they're limited, the amount of staff they've got to be able to do proactive work, because the staff who do the reactive work, their welfare teams, their customer support teams, are actually seeing quite a lot of increase in work as people move over to universal credit anyway. So in fact, they are cutting back in their proactive work rather than upping it. So yeah, that's the pattern of use we're seeing at the moment.
Ben, do you know anything?
Yeah, I would just follow up to say that the benefits calculator that kind of goes alongside the dashboard, although we don't work directly with individual benefit claimants, that is available online, and it's directed through gov.uk, so we do have a fairly regular stream of just independent users, and that has most of the same functionality and allows individuals who may not already be on universal credit to kind of put in all their financial circumstances and see whether they're going to be better off or worse off, and do that same sort of preemptive modelling to see, okay, how many hours do I need to increase my work by in order to break even under universal credit, that kind of thing. And just to, again, to really emphasise Zoe's point that through the dashboard and through the information that we collect, there is a huge amount of potential for proactive, sort of preemptive intervention, particularly with this question of self-employment. We can literally, on a Google Street view, say, okay, that household, they are self-employed, they're going to be this much worse off under universal credit. And we have all the information that's captured in the DWP data on that household circumstances, so number of children, disability status as identified by DWP. So we have a certain amount of information about like risk factors associated with that transition. I think, to my point previously, was maybe we need a little bit more information on those specific households because it's a relatively small sample size. I think that would be definitely achievable if there was someone wanting to do that research. This would be a great starting point for identifying those people. Yeah.
Neil, we've talked about this benefits calculator. What work has been done to make this easy to find? Do you have a similar thing? Could you be using their system?
So the government uses policy and practices and a couple of other benefit calculators. It's accessible through gov.uk, and we work with policy and practice to make sure it could be.
Okay, we all love .gov.uk, whatever it's called. But is there any way of getting it out there more widely? Because knowing, individuals can do preemptive work themselves. If more individuals ask for this, more councils may become involved. It just seems like something that we should be pushing forward, not just let it rest on a government website.
So I agree with policy and practice that there is more that job centres can do in partnership with their local authorities. Colleagues with housing associations, I think housing associations were prior to 2010 a bit of a sleeping giant in the field of work better work. They're now really energized on that. They've really picked up the baton there and run with this. That's a very positive development out of the reforms that we're doing. And we can use our own data in the same way that policy and practice use their data to inform what we're doing locally. We're particularly looking at this about managed migration, where we're moving around 2 million households onto universal credit from, probably won't start in volume now to about 2020, between 2020 and 2023. So we're trying to get that process right now.
Does this managed migration and your rollout, does it effectively act as a pilot? Can you adjust things as you go along, as you face new challenges, as policy and practice say to you, here's what we're seeing?
So to some extent and to some extent not. So rollout is nearly finished. We're about 3 weeks from the end of rollout and universal credit being in every job centre across Great Britain, and in fact in Northern Ireland it finishes a week earlier in Northern Ireland. So it'll be right across the country then. That's for new claims and change of circumstances. And then, as I say, in July 2019 we're going to start testing small pilots, so back to piloting and testing, which is what we did with universal credit for the first few years. And then once we're convinced we've got a viable system for taking on large numbers of people, which we'll make a judgment probably around the autumn of 2020 about whether we're ready to go to volume on that. All the time now, though, universal credit is growing. It's growing quite fast. In October, there were 140,000 new claims to universal credit, and there are already 1 million households, 1.3 million people overall on universal credit. And that will grow now steadily, so we'll be at 2 million by around April, and towards the end of 2019 into 2020, we'll be at 3 million. So the caseload really grows quite quickly now. So our ability to tweak things is still there, but if you have to make a major policy change, something like the run-ons we announced in the budget, they take a little time to now code and put in the system, because I need to be sure that by coding the system I don't interrupt the payments of everybody else when I put that fix in. So I asked ministers and Parliament for a little bit of time to get changes in now. When we were at the piloting stage, it was much quicker to get changes in and flex the system.
Okay. Just focus on Kayley for a second. What work has Citizens Advice been doing to support universal credit claimants?
Absolutely. So since universal credit's been rolled out, we've helped over 150,000 people now with universal credit inquiries. The bulk of those inquiries relate to the initial claim at this point in rollout, and you would expect over time for that to change. But at the moment, it's things like people unsure about what they should claim and when they should put a claim in, because it does make a difference for universal credit. It's the actual claims process. We've documented this, and there are at least 10 stages to the claims process. and several deadlines within that, which if you miss, your claim stops and you have to start again. So we see fairly high rates of people having to make repeat credit claims. Lots of problems around people getting sufficient evidence to complete their claim so that they get paid on time, and challenges around the claimant commitment and what should be in it and if it's appropriate for them. Beyond that, our inquiries relate to things often relating to delays or errors, so problems around people being paid late. We know from DWP's data that still 1 in 6 people are paid late. They don't receive their full payment on time, missing crucial payments like rent or childcare, for example. We also see particular issues at the moment around people who have a disability or a health problem. So if they've moved from the old system, the legacy system, into universal credit, it's not particularly smooth for them at this point in time. In addition, beyond the initial claim period, we help people with lots of issues around deductions and debt repayments. So we were glad to see at the budget a reduction in the overall level that can be taken from somebody's universal credit claim. But still, we see people really struggling with having 30% of their standard allowance. So the kind of core bit of their UC potentially reduced once this change comes in. So lots of different issues. We help people by making sure they have the correct information. We give tailored support so that if an individual just needs information and reassurance, we can do that. If they need help to go through those 10 stages or to correct errors and delays or problems with their benefit, we help them to take action as well, so somebody who has higher support needs. And as I say, we do this in a way that empowers people, so we always show them the information. We don't just take action for them. We always set out the options that are available for them to take and ask them to make a proactive decision about what they would like to do. For us, universal credit isn't a straight replacing of the inquiries that we used to have around, say, job seekers allowance or tax credits. We do see a difference, the change in that nature of inquiry. So the difference largely is around the initial claim being such a big area of advice rather than those kind of errors or problems with it. But also in terms of volumes, in terms of the amount of people coming to us. So it's much harder to track now that we've got to this stage of rollout, but earlier stages of rollout we were seeing roughly 10% of all new universal credit claimants, the equivalent of that, I stress. Now, given that you're talking 7 million households roughly over the rollout of universal credit, and that we have a relatively fixed supply, that was a challenge for us. We could see down the line that was going to be a massive problem in terms of being able to help those people. We really welcome the addition of the universal support funding that we've recently received, and will be running universal support from 1920, so April next year. It's a new service, not just replacing assisted digital and personal budgeting support. It's more end-to-end, independent, impartial, initial claim support. So through all of those 10 stages. What we were seeing with universal support, it's different in each area as it stands. And what we were seeing were there were gaps in that support. So you might get help to make your initial online claim, and then you might get help to, say, open a bank account. But in between, the bits where you've got to submit evidence, the bits where you've got to complete actions on your journal or your online account, people were having challenges getting support at that stage. So ours is end-to-end. It isn't one size fits all, so if you need that reassurance, we can do that. If it is that handheld, we do that as well. And we also ensure that people know about things like advance payments, alternative payment arrangements and the like. That's in the design of the current offer. So we'll be running that from April. We are in the process of piloting that service at the moment in a handful of areas, mainly to check things like demand, so how many people need that level of support and what level of support do they need, but also to check it's the right type of support. So we'll be taking a similar test and learn approach to what Universal Credit has, in that if we do see issues, then we can then change the way the design works and work with our local network to ensure that happens. So at the moment, we are helping people who are coming through our doors with that initial claim and beyond. We'll continue to provide that help as we do at Citizens Advice, but now we have the addition from April of having a very specific support service for the initial claim service part of support.
Just one small question before we move on, Chair. What specific issues are you seeing around the budget calculator and software and people having to apply online. Again, Zoe, you may want to come in as well. Are you seeing any specific issues around having to do it online and all those sort of things?
Yeah, so a lot of our clients do struggle with online. Like online skills and access and trust are not a given, particularly for benefit claimants. It's different for every group. So we see a lot of people who are just struggling with the very fact that it's online in the first instance. The actual claims process in terms of like submitting information and the like, it's really variable as to how people are faring with that. But what I want to stress is it's not just a case of going online and typing in your information and pressing send, which you could potentially do with an individual. You've got to set up an online account, you've got to do things within timelines, with deadlines which will close your claim. You've then got to keep interacting with that system on a regular basis, and certainly throughout the claims process as well. In terms of benefit calculators, there's several that exist, and we support our clients to use them and use them with our clients to do it. It is very hard with universal credit to give people a sure message on what their income is going to be at the end of the month, and this is like one of the fundamental challenges. If somebody comes in and we help them with their claims process, saying to them, right, you'll definitely get X at the end of the month, is nearly impossible. You can give people a really good outline of what it might be, but you can't give them the actual definite amount, because people's incomes change over that month, and their universal credit will change potentially during it. So there is an additional challenge that you didn't see in the same way in the legacy system of that surety of income, because it is more reflective of people's incomes during the month. Whereas, say, tax credits looked at over the year and you had a certain income from tax credits, unless you had a significant change of circumstance, that people were then able to budget on the basis of having that surety of that income.
Okay. But it does that. That's the tension, isn't it? This system that is responsive, but then is initially more complicated, but ultimately is probably a bit simpler because of the number of benefits that were shooting around beforehand.
Yeah,
I mean was a bit much.
I myself am a welfare benefits advisor, and I lose count of the amount of better off calculations I've done that go, so if you do this many hours in tax credits and this many hours for JSA and housing benefit, and how does that all interact, and it is massively complicated. So it's good that we've got kind of one system that looks at it. The challenge is that system has to really reflect a diversity of ways of earning and different income patterns. At the moment, it works quite well if you have like a sure income and it's paid on a monthly basis and you're not self-employed in many ways. It can work well for you. If you've got diversity in the way you earn, then universal credit creates new challenges that didn't exist in the legacy system.
So Neil, are you planning a system that will have that?
So Kayley spoke very clearly about the kind of issues we both experienced and spoke about through 2017, and arrived at a conclusion that Citizens Advice, and for Scotland, Citizens Advice in Scotland, could provide a service there, what I colloquially call crossing the bridge, but basically making it safely on to universal credit. Remember, what we're trying to do here is effectively do 3 benefit systems worth of verification in one go.
Okay.
And people often complain compare universal credit to the old system, but if you think a tax credit renewal took 12 weeks, or housing benefit administration in most councils is up towards a month to do, you can see that a process that takes place across a month is, for many people, actually improvement. Now, we agree with Citizens Advice. We want more people to be paid in full on times. About a third of people are not being paid because they haven't signed up to their commitments, and universal credit is a conditional benefit. You have to do things to get it. So we make no apologies for not paying those people, but there are a bunch of people, as Kayley's saying, who need help and support through the system, and that's what we're looking to Citizens Advice to provide, and we've funded them to do that, and we've changed the way universal support works for exactly that reason. So, there is always a constraint on your design of any system. So if you take monthly assessments, which are a core part of the system, it's been put to us, certainly by some of the organisations representing self-employed people, it would be easier for them if it was annual, if you did an annual assessment like they've got in tax credits. What you get from that is I've currently got the burden of trying to recover 5.9 billion worth of tax credit overpayments from people inside of universal credit because of the debt that grew up over years and years. But the other factor is 10% of people who are self-employed and on tax credits are also earning. So their earnings will be coming in weekly, 2-weekly or monthly into the system. And there'll be people who are self-employed whose partners will be earning. So you can't have a mix and match system here. You have to have a monthly assessment. And it will mean that for some, you can't optimize this system from every individual's perspective. You have to make some design choices and then make sure the system for those people who are experiencing probably more difficulty than the vast majority, that you render assistance to them. And that's what our relationship with Citizens Advice is attempting to do.
Okay, thank you. Still from you.
Can I mean, a couple of you have just touched on it, the reforms in the budget. Generally, I'm getting the impression that the reforms in the budget are making a difference in a positive way to improve.
Can I just make a point about the budget regarding self-employed, because that's what we did some modelling, and the self-employed are actually worse off from April because of the budget, even though the money's gone in, because the minimum income floor is based on the national minimum wage. So for those, if you increase the minimum wage, you're increasing the minimum income floor. And of course, the self-employed who don't have children are not benefiting from the work allowances. So what we found is self-employed without children would be on average about £9 a week worse off from April 2019. Those who did benefit from the work allowance extension would be £2 a week better off, because obviously the work allowance is being offset by that minimum income floor, but they end up being slightly better off. But overall, there is a slight drop in income for the self-employed from April 19, and that's not to do particularly with the increase in the work allowance, and that's also to do with the minimum wage increase, which of course everybody supports, but it's just had this unfortunate
It has
effect.
a knock-on effect. Right.
Yeah.
Okay, thank you for that. Caroline.
Thank you. So continuing on talking about support and advice from where Sean has left off, I just wanted to first of all pick up on something. Someone was talking about errors, and certainly as a counsellor I experience casework with people on universal credit where errors have been made, and that then carries on for months trying to sort that out. So I'm just wondering if anyone can tell me what, how people who are on universal credit can get errors revised effectively and quickly, so that the problems of universal credit being paid wrongly don't continue for too many months. I don't know, is that one for you, Kayley?
Yeah, I mean, so at Citizens Advice for many, many years, we've helped people with benefits, whether it's legacy benefit system, it's our biggest inquiry area, and now universal credit coming in as well. What we find in terms of when things go wrong with somebody's universal credit award is often around like not having the right elements in place, having inappropriate conditionality, for example, those kind of things where then there's a sanction that needs to be overturned. What we find is when we call the service centre and the like, so we help people, they come to us, we act on their behalf or with them, it can take longer to resolve. Now, I can't give you data on that, because what we do is record what people come to us about, not necessarily whether the problem took 2 weeks to resolve or 4 weeks to resolve or was resolved on the spot. But we know that it can be more complicated. There have been some changes to way...
Sorry, it's more complicated if people...
to fix issues.
Right.
And some of that is just because it's a new benefit system. So when we're calling Job Centre or the service centres, it can take longer to get to the bottom of what's going on. There are challenges around implicit consent and explicit consent. So the way advice providers can support individuals has changed, partly due to data protection. But it basically means that every time we support somebody, we have to potentially get a new explicit consent from that person that we can help on their behalf. And that causes an extra challenge, an extra barrier. It can take longer to sort out. And I understand the department are looking at that in some ways. In the old system, effectively, if we were seen as a representative, if we'd got some kind of consent signed off, If the person was with us and gave consent, then we could then act on their behalf. That's become harder in universal credit to do. So there's two problems here. There's a new benefit system, so it takes longer on the DWP, the job centre side, to fix because it's harder to get to the bottom of what's going on.
Mm-hmm.
And then the second challenge is it's become harder potentially, in our experience, for advisors and support workers to act on somebody's behalf and to help them with their claim.
Mm-hmm.
So in two ways it's become a little more challenging.
And is that something, Neil, that is being looked at in terms of how these kind of problems, how, you know, the fixing of errors can be sort of streamlined and sped up?
So one of the things we've done recently is put in something, apologies for the management jargon, called call routing. But we currently run, or we used to run, a virtual telephony system across the whole country. So if you would ring up, you'd get through to somebody and they'd have to start on your case from scratch. And that's what Kayley's alluding to in her evidence, you know, in terms of the experience there. What we've done since the summer is roll out something called call routing, which means we can identify from your number where the call should be routed to the team. So say we've got a service centre in Canterbury, and say your case is dealt with by Canterbury, it will try to route the call to that team, actually to your case manager. If your case manager isn't there, then it will go to the team there. That means that the team already know your case and can you know, cut out maybe 10 minutes worth of questioning about, well, what is the basis of your inquiry and so forth, because they know the issues that you may be facing. And the recent changes we've made to call routing allow the advice agencies as well to identify as they call through to get themselves call routed. Now, not every call routes, and also some claimants don't want to be routed to the actual teams administering their benefit. But that's one of the things where we're trying to address issues as they emerge. I agree with Kayley that it is a new system, and we are recruiting people to it. So we've got variable levels of experience within the system, but you are seeing sustained performance improvement going on. So this time last year, I was under a lot of questioning, particularly from Kayley and her colleagues, about the decision to expand the rollout from the small number of pilot officers we had to running 50 a month, going to 50 job centres a month. And there was a lot of you can't cope. Well, in that space of that year, we put 1 million people onto the Universal Credit full service, and the payment timeliness has gone up from 74 to 84% in terms of people paid in full. So I think the Department for Work and Pensions is showing it can both expand this service and improve the levels of service that people are getting. Is it good enough yet? No, it's not. We aspire to higher levels of customer service, as my new Secretary of State was saying just in the House yesterday.
Thank you. I'll move on now. Universal credit the sort of reporting is all online, and I'm wondering, is that a particular problem for some self-employed people? Maybe Andy, if you'd like to start on that.
Yes, it is for some self-employed people. As Kayley touched on earlier, there is a group. There's another big government project going on called Making Tax Digital, which is experiencing some of the similar teething problems, because there is this expectation which people are going to interact with the system digitally, a bit like universal credit. There's an expectation that you will interact digitally, and with Making Tax Digital, everyone's going to have to go online and report their income and outgoings to HMRC as part of the new process. And what they've discovered there is that there is a couple of groups, one they call digital excluded, and one they call digital assist. Digital excluded are groups where they really don't have particularly good access to online platforms. They really don't use computers. They are extremely nervous about digital interactions via some sort of digital interface. And they are a particularly difficult group, and the government has made some exceptions for that group, and they're sort of working out ways to get around that problem. Digital assist is a slightly sort of lower category where they recognise that there are some problems with that, but these people will be able to interact digitally, but they will require some assistance to do that. And it's self-employed people largely who we're talking about here, because these are the ones that are going to be, well, certainly in the initial phase of making tax digital, they were the ones who were going to be asked to be onboarded first. They revised that somewhat, partly because of this digital exclusion problem. So there is either an inability or a reluctance, depending on which group you're in, to interact via the digital programs, and that is a barrier to some.
And are there, of the groups where it's been rolled out, are there is there any data on are those who are either digitally excluded or in need of digital assistance more likely to have errors and issues with their universal credit payments?
So can I just give you the data I've got, which is that from our self-employment tax credit survey, it was reported that monthly reporting is not a problem for most as they compile records monthly. We've got 97% of people now reporting online their self-employed earnings, and when we surveyed them, 85% said they found online reporting easy, 6% hard, and 37% of people are doing their reporting outside of normal business hours, so they're doing that at, in the evenings or whatever. So, digital brings challenges, and it's quite right to say it brings challenges for a small minority, but it also brings advantages, the ability to interact with government outside of office hours and not have to interrupt your work to come and report stuff to us.
So that's useful to understand those percentages of people who find it easy or hard, but of that 6% who said they found it hard, do they have a disproportionate number of bits of friction in terms of how they're receiving universal credit?
So if you focus on the 3% who are not reporting online, they are ringing us up to report their self-employed earnings there. So they're managing with a digital system by not being digital. That's their choice. They also have to ring up in office hours in order to report that. We try to encourage people to go online. We think it's a better service for them. And it makes the system runs better as well internally in DWP, where we can get that to work, which is why HMRC are trying to make tax digital. We're doing something similar with universal credit, but because we're the system of last resort, so we always have to have systems that cope with people who can't interact with us in a digital way.
So you don't know whether there are more problems for the people, say the ones, that 6% who find it hard to report online, are they ending up with more errors in their cases?
The error they will get is if they ring in their, anybody who reports their self-employed earnings late will see an interruption in their universal credit payments. So we do a lot of work with self-employed people to say, please report your earnings on time, do it online. If not, ring us up. Now, some self-employed people forget to do that. They're busy. Maybe they're trying to expand their business at that point, and they just forget to do it. We'll put the payment back in place as quickly as we can once we've got the self-employed declaration of their earnings. But is that a feature of not being digital or digital? I don't know in the answer to that. My assumption will be it's better to do it digitally. Because it turns up in the workflow then for somebody to assess the case rather than ringing up and waiting for that. So, it's a service that's there for people, but we encourage them and we try to coach them through the best way to make sure their payments arrive on time.
But the fact that they have to do that reporting is a particular problem for self-employed people, because obviously if you're employed, your income is just known and it's just simple. Yeah. Okay, thank you. Faisel, I'm just wondering, in Fair Finance's experience, what are the most common money worries that self-employed people raise?
I think they're probably mainly the two that I touched on earlier, which is the two very lumpy large payments that they need to make, effectively HMRC payments and rental or deposit payments are the biggest challenges for them. Whether those are rental payments to do with work or rental payments to do with personal finance are probably the biggest areas in terms of finance. One area that we do pick up quite a lot of kind of thinking around is that often we're working out the problems that many of these businesses have when they fall into arrears, and you know it doesn't kind of we don't miss the point that actually many of these businesses are spending a huge amount of time managing lots of complex finances and not really enough time managing their business, and that surprised us quite a lot. So in the defaulted businesses that we've worked with over the last year, we found that nearly a third of them were spending more time organising their personal finances than they were actually thinking about their business. And I suppose my reflection on looking at some of the conversations we've had here, a lot of it seems to be around managing a system, and very little of it seems to be about managing the opportunity. And the point around, are we stifling entrepreneurship and innovation? It's, you know, if you're spending most of your time managing something that is in your business, I think you're distracted quite heavily. And I suppose I worry when I hear these kind of conversations of how much time we spend talking about process and not really looking at the opportunity that people are giving up to do something that might generate significant amount more income or allow them to lead a lifestyle in a sustainable way that they couldn't in other ways.
So when you say that people are spending a huge amount of, or they're being distracted by the need to manage their personal finances, is that, I mean, we obviously in the committee heard last year when we did the report on financial health of Londoners, about people sort of needing to take out multiple small loans, paying, you know, bits of credit card debt, borrowing from friends and family. Is there, so are you saying that actually that kind of sort of financial precariousness is impacts on people's ability to cope with universal credit, do you think?
I don't know specifically about universal credit. We have very little customer. As you say, it's a small group of people, but around 60% of the businesses we back do have some form of benefits. And I suppose I would turn it around to tell you that what we do see increasingly is, and we touched on it earlier, is the challenges of managing so many different types of payments and vulnerabilities takes time and pressure. And it is increasingly difficult that we find that people who default have found it increasingly difficult to manage those levels of complexity. And so in those senses, I suppose I'm making a kind of a judgment that the personal finance pressures, the business finance pressures, the other kind of pressures that they're having, juggling all of those systems is taking up their time. And I think one of the things that I've observed is that it's often a lot easier to get access to small amounts of credit than it is to get access to the right kind of advice. And I find that quite interesting. I also find it quite interesting that it's easier to borrow from a payday lender than it is to negotiate with one of your creditors. I also find that quite a problem. I've sat with utility providers and asked them to explain to me why their customers would prefer to use a high-cost payday lender than they would to ring their service line to restructure their finances. And I think there is something here that is much, much broader than just the individual circumstance of the business. It's the wider life around them that they have to navigate, and the less money you have, the less time you have. And I think that's what makes many of these things precarious. I take all the points around the positiveness of universal credit, combining lots of different discussions, but I think it's one part of a much broader ecosystem of complexity that these people have to manage that won't be addressed by simply changing the benefit system. It's a much broader issue about financial management, capability, resilience, and other types of financial products. And until we find a way of giving support to those people that is as quick and as simple and as useful as currently provided by very expensive finance, we're going to be in a similar kind of position where lots of opportunities are going to go begging away.
So are you thinking that actually if the government is running a benefit system, that they should also be providing citizens with advice on how to how to use credit responsibly if you need to, how to manage finances? I mean, do you think are you saying that you think it would be useful for the sort of benefit system to actually incorporate some of that financial advice side of things?
I mean, I'm not sure who the best person is to provide the best kind of advice, partly because people don't really like listening to people they don't trust. So I think finding the right vector is probably the most important thing when we think about providing financial advice and capability. I do think it's an important variable for people to consider. And I mean, I didn't know a huge amount about the plans for long-term coaches, for people moving into different types of benefits, but it does feel if they don't have some of that knowledge and understanding, then they won't be able to give people the right advice. I do think in the broader environment, there is precious little support around financial capability and financial management that people have access to. I think a huge amount is done to give it to children in school. There's lots of discussion around improving financial management at that level, but there isn't really that same level of detail being done for adults, and I think you can get a lot of help if you're in really bad trouble, but actually the challenge is how do you help people who haven't quite got there, and I don't think there is a proper provision of that type of service.
I think Jeanette will be picking up on that some more in a minute on the financial capability issue. Do you find yourself, does Fair Finance give personal loans or only business loans?
We give both, actually.
You give both. So do you give, so what's the proportion of personal loans that you're giving out to people who are in receipt of benefits?
So of the lending that we do each year, we probably lend about 70% of our customers are in some type of benefits, whether that's fully only provided, all their income is provided by benefits or some portion of it's around 70%. That's significantly, that's in the personal lending side, and on the business lending side it's much lower, it's probably about 30 or 40%.
Okay. 40%. Thank you. And do those, are those loans that are helping people to kind of actually navigate kind of significant financially difficult moments, or are they loans that are about a sort of long-term steady situation?
I mean, broadly, I would say that I always kind of joke and say that I think Fair Finance was set up about 20 years too late. A significant chunk of the lending that we do is to refinance high-cost lending. Most of the time we're taking people out of high-cost and unsustainable finance that they're struggling to pay, so maybe 60 to 70% of it. A significant chunk of the lending is also around one-off items, replacing something that might be broken, like washing machine or cooker, moving into a new flat or property. These are all in the personal finance space. And on the business finance space, it's usually around one-off items, so whether that's to pay for stock or to replace machinery, to cash flow a transaction, or to put a deposit onto something, as well as refinancing high-cost providers.
Thank you. And then I've got one more question for you, Faisel, which is I gather you are in favour of open banking, and I just wonder if you could say a little bit about what open banking is and why it's important for the financial health of small businesses.
I can tell you what we think it is. I think it's an interesting area. So we use, I guess the broad word of open banking is just access to banking data and information. We use it quite a lot in the company to access transactional data that people have within their bank accounts. So being able to use real-time live information of what's happening in your bank account is really, really important to help us figure out what your cash flow is. Often you won't know as well as the bank details might do, and the bank is not using that data to make decisions. So we use that, and it helps us reduce essentially the transaction costs. So rather than ask you to give us a printout of your payments and put that into a spreadsheet or try and figure out what's going on, we can take that data and within a few seconds produce a cash flow, either of your personal life or of your business life. We can use that assessment to understand who you owe money to and who you don't, and what you're paying, as long as you put your transactions through your bank account. What's interesting for us is that about 70 to 80% of the businesses we work with use that service, but only about 40% of the personal finance customers use it. There's a big split between people who are running their businesses, working online predominantly and accessing that service, and people who are personal. We think it's a huge potential to reduce costs, but we're also really mindful that this does have issues that has been touched on issues around digital exclusion, people not really using online banking. If you don't use online banking, you can't use open banking very easily. We've seen this market of open banking providers develop very fast, whether that's around platforms or lenders. which has seen a huge increase in the number of online lenders, aggregators and options for people to access finance. And while we are super supportive of what's possible, I think the reality of what we've seen has not been fully realised. So although you now have more access to finance, it generally isn't cheaper than you might have had access to from the bank. Although you might have quicker and faster providers, quicker and faster is the only advantage that these providers have, not price. And what we've seen in this market is an industry that's trading on speed rather than price, and often trading on speed rather than responsibility. And in order to gain market share, we've seen many small businesses and individuals become over-indebted very quickly. And one thing we talked about at the previous evidence session I've been at is that obviously most people probably know that small business lending is unregulated. And so that means that the transparency of interest rates and the collections practices are not as well covered for covered for consumer finance. Where this overlaps to the conversation we're having here is that if a lender was to lend to a self-employed business, they would be caught under the consumer credit legislation, which means they would have to advertise their APR, they'd have to have a consumer credit licence, and they would have to be bound by all the regulations that the FCA have put around responsible lending and collections practices. The net result has been that all of these institutions that have created for fast, quick analytics around your lending have chosen not to lend to self-employed businesses because they do not wish to be regulated in the same way. And I think there's an increasing level of financial exclusion for personal finance, for self-employed businesses to access appropriate and flexible finance. The net result has been that many of these individuals and many of these small businesses are using very expensive, high-cost personal finance providers to give them access to credit. And I think one of the things that's often unsaid in this conversation around what is happening in this market is that we're building a fast, transparent market for SME lending. We're improving the regulation for personal finance lending. And in the space where self-employed businesses are, we have expensive finance designed not for them being accessed because all of the innovation is happening to a different group of people. And I think this raises some real challenges for self-employed businesses that not only are they struggling with complexity, all of the innovation is not happening in their market. Mm-hmm. We work with a number of mobile app providers, fintech providers and others, and I've been really surprised that they're either designing solutions for personal finance use or business finance use. Nothing for the complexity of self-employed businesses that overlap those two. And I think there is a big space here, and it links in very closely to this discussion around what is the right type of advice, what is the right type of support that this group is having. And the truth is that nobody is providing it right now. They're sitting in the inappropriate personal finance or the fast innovating SME finance market that doesn't really work for them. Mm-hmm. So while I'm very supportive of open banking, nobody's really working in this market yet.
Thank you. Is there anything, are there any other challenges on support and advice? Anyone that we haven't picked up before I hand over to Jeanette? No. Thank you.
Okay. I mean, the one thing that this is throwing up is that being self-employed has very, very many more challenges than people realise when they go into it, and that's for sure. Right, last but by no means least, Jeanette.
Yeah, thank you, Chair. This sort of section is a critical section for us, because really what we need to do is to be seeing what the Mayor can do in this area. So what I just want to start off by asking Faisel, and coming back to you, Faisel, just for clarity, your last comment, you said nobody is providing adequate, what is that, financial capability support or general support?
I mean, we have struggled to find the right type of advisory support. This is specifically around small businesses, self-employed businesses. Yeah. We've struggled to find the right type of business support that will help these businesses, but we've also struggled to find the right type of financial management support. So whether that's around what we would call financial capability in your personal finance, we've struggled to find something that's appropriate for these businesses.
Okay. That's very interesting. And then I'm told officers looked at cities and came up with what's going on in New York City. Now, bearing in mind that the difference in personal and business tax take by the city is totally, distorted, in that London retains 6%, New York has 50% take on both personal and tax. So, are you aware of the work that's going on in New York City in terms of enabling? Now, I'm not sure. I would think it's targeted, so let's say that it's targeted at low-income New Yorkers. Are you aware of those sort of initiatives that the New York mayor's taken? And if you are, could the Mayor of London take comparable initiatives?
I'm aware of some of the work that they've done, and they've taken a long-term view around providing consistent support for individuals who are either requiring financial support, both in terms of finance and in advice. And actually, what I think they've done is quite interesting in how they think about making long-term commitments, because one of the biggest challenges is, it's very difficult to know where the next piece of advice is going to come from, because often institutions disappear very quickly. So I think, firstly, I would say, yes, I'm aware of some of that activity, and I think the most important thing they've done is to take a very long-term view about it. What I would say, and I think you're right, obviously the Mayor of New York has different resources to the UK, but what they have done in America more broadly is that they found a really positive way of engaging with large corporates and institutions to back and support different forms of innovation and provision of services. And one of the most interesting things I've seen in New York has been foundation-funded activities, investment bank foundation-funded activities around looking at the financial diaries of people who are on low income. And I don't think that a similar kind of work has been done in the UK in the same way, of really trying to understand what is the reality of people who live on low income, how do they budget and make those choices that are appropriate to them. And here is somewhere I think America's done a lot better by using these large institutions to finance new forms of innovation for non-profits, using those foundations to finance research through non-profits as well as through public institutions to create a much bigger evidence base of what could work. And we're doing a current piece of work right now funded by the JP Morgan Foundation, and we partnered with an organisation in the US who are very much involved in financial services design. And I was very much struck by how integrated the relationship between corporates, the public, and non-profits are in looking at solutions in this market, both technology and non-technology related. And I think there could be a lot more done in terms of transitioning and transferring some of those learnings, because I think the issues they're dealing with are no different to the issues we're dealing with here.
Yeah. Andy, there is an initiative called the New York City, I've lost it, Safe Start account, and it's where New York City is partnered with 7 banks and 4 credit unions to offer New York City Safe Start account, a safe and affordable starter account. Going back to what we've been hearing about that first year, is that, I don't know if Hayley's nodding.
Yeah,
She can come in later.
This is a bank account, is it, which is tailored towards start-up businesses?
Yes.
Well, one of the things that I do think is attractive about that is that we have been trying to do a piece of work, and I think we've worked with Money Advice Trust, possibly even Citizens Advice before, where we've tried to explain to people the benefits of having a separate bank account from their personal account, because what you'll find is many self-employed people simply merge the two together, which very quickly can become quite messy. And there are lots of advantages, and almost all the financial advice says it's really quite helpful if you just get a separate business account. You can see what's going in and out of the business, and it helps you to plan and do various things around it. It shows you what you need, where the shortcomings are, etc. That sounds attractive, if nothing more than the fact that it would be a very good nudge to people to get a separate business bank account when they start their business, which is the time when it would be the best time to get in there to get them set up and doing that. I'm afraid I don't know very much more about it than that. I only know what I read in Pauline's excellent briefing about the initiatives in New York, but it does sound to me like it could be a good idea.
Yeah. No, I've only picked that out of one of 5 good examples. I'm sure there are more. I'm just trying to hone in terms of, because it's always easy to either shout, the mayor should be doing something. And then when you come down to it, it's what is it that the mayor should be doing. So, Hayley, your meeting, you've got a minute with the mayor in the lift.
I have the privilege of a minute with the mayor.
What do you want him to do?
I think financial capability, education, advice and assistance is something that really is important. And I say that in line with what Faisel has been saying, specifically targeted at groups that face extra challenges like those who are self-employed. This kind of funding does exist in many ways, but it's not targeted to those groups in that specific sense. And lots of places are unwilling to either finance or give advice in that way because of the complexity and because of the extra risks involved. I think there is something about using any capital to help innovation in that space so that businesses can start taking those risks, and there's potentially something there for the mayor to do. It was mentioned earlier by Zoe around council tax schemes, council tax support schemes, and the risk of MIF, the minimum income floor in those spaces, is really high and really detrimental, especially as there's not extra support in place in those areas either in that policy. So that was something that I would advise or ask the mayor to look at in terms of councils and their actions there. But yeah, I do think the New York kind of equivalent, the New York kind of package there is really important. It's a package, so it's identifying all of those different elements that people are struggling with: access to appropriate accounts, access to finance, access to advice and support. Crucially, in terms of what we're talking about today as well with universal credit as well, there's something in here about products that smooth income. So we want a benefit system that gives people enough money to live on. We also want a benefit system that gives some people certainty and security of that income so that all of their bandwidth isn't taken up thinking about how they're going to pay their bills and the like. Now, from our point of view as Citizens Advice, we want to see improvements in universal credit to give more surety and certainty of income. But there are things that products can do in addition to that, banking products and the like, to help people smooth that income. So there's some innovation space there for sure that I think the London Mayor could push in that space.
Well, in August, and it's early days yet, the Mayor said, in answer to a question at Mayor's Question Time, that his officers will actively explore opportunities to work with boroughs and civic society organisations to ensure the effects of universal credit, the policy shortcomings as he's identified. Has anybody been approached by an officer from the Mayor's office yet?
I'd have to ask our London Citizens Advice specifically about that. I can do that and report back if that's helpful.
Yeah, because you seem a sort of reasonable first point of call. Yeah. Okay, well, another statement made in May 2018 in answer to a question posed during Mayor's Question Time by my good colleague here, Andrew Dismore. The Mayor said, over the coming months, City Hall will be doing work to understand which groups in London are most at risk from the reforms to allow me to better advocate on their behalf. Now, people always forget the power of advocacy and enablement that is enshrined within a mayoralty. People always go to the pound sign first. Zoe and Ben, have you had any contacts with the Mayor's office about your data gatherers, your modellers?
But we'd love to share it. We can break down completely the impacts by all sorts of different cohorts, so all sorts of different groups. We can see exactly how much are going to be affected. We can see immediately any sort of changes being proposed by the DWP. So you can look at any particular group and see the impact on them, and we can also see which are obviously where help should be targeted, the people who are going to need the help the most. So we would love to hear from the Mayor's office.
So there's a capacity there, yeah. And Neil, I don't really know how you work with the mayoralty, if it's appropriate.
So the mayoralty speaks to the government on a number of matters. I won't presume in a public environment to try and advise the mayor, although if he hasn't been to see universal credit in one of our London job centres, he should, because he'll see the massive amounts of good it's doing, as well as, you know, as my Secretary of State said yesterday, we've got problems still to work through. But for the majority of people, universal credit's working well, and I really encourage him to come and see that and feel that for himself.
So you're saying from his statement earlier on this year, in terms of the policy shortcomings, you're saying that he needs to go and see whether those shortcomings are evidenced?
We encourage local councillors, MPs, members of the London Assembly to visit and come and see universal credit for themselves and make their own judgments about just how well it is going. And, you know, I don't say that as a criticism of anybody. I just think you can't do any better than actually going to see something for yourself and experiencing it.
Yeah, no, totally agree. No, I don't think there's any further I can go with this.
Okay.
Yeah.
Well, we're coming to the end. I mean, clearly new systems take a while to bed in, and it has to be right that one system is better than 6, even though we're bound to have some teething problems. And it's always essential that people are better off when they're working than when they're on benefits, and I'm sure we all agree with that, and it's something we must all strive towards. So may I really sincerely thank all of you for your contributions today. It's been really, really interesting. Can we note the discussion, and can we also delegate authority to me as chairman to agree on appropriate output from this meeting? Thank you. Can we note the work programme and priorities for 2018-19 as set out in the report, and delegate authority to me in consultation with party group lead members to agree arrangements for any site visits, informal meetings or engagement activities before the committee's next formal meeting? Thank you. The next meeting of the committee is scheduled for the 17th of January to Thursday, 17th of January 2019 at 2 p.m. Thank you.
GLA, Chamber,